Okay, I think we can get started if that sounds good with everyone. Hi everyone, welcome. I'm Maddie, and I'm a fifth-year Northeastern student studying economics and business with a concentration in social entrepreneurship. I'm one of the co-directors of Community and Impact for NU Impact this semester, and as David just mentioned, last semester I did a co-op with Green America, which is one of the microfinance companies that you'll have the chance to learn more about today.
And hi guys, I'm Tiffany. I'm a third year at Northeastern studying economics with minors in international affairs and data science. Currently, I'm a research analyst at NU Impact, working with the community and economic development team. Like Maddie and David has mentioned, I'm the current co-op for Green America this semester, where I'm starting to gain my experience in the microfinance industry.
We're your co-moderators for the Creating Opportunities Through Microfinance panel. Today we'll have the chance to hear from David Go, the CFO of Green America, Christelle Carrizzo, the Institutional Partnerships Manager at Accion, and Sarah Adil, the Strategic Partnership and Business Development Leader at Kiva. Today's panel will be in the form of a fireside discussion that will touch on our panelists' experiences in the microfinance space and then also the industry in general. If anyone has any questions for our panelists, please put them in the chat or in the Q&A section, and then we'll get to those at the end. Before we do introduce our panelists, we wanted to give a quick overview of what microfinance is and why it's important for any of our audience members who are new to the space. Typically, microfinance refers to financial services that are provided to low-income individuals who are typically excluded from traditional banking. These institutions usually focus on providing small loans called microloans. With this model, those who would typically be excluded from borrowing capital to start their businesses are able to do so despite potentially not having any credit history or collateral.
So why is this an important topic to discuss? So the importance of this topic is because the access to capital for these underserved communities allows more people to invest in and provide for themselves. And by empowering these members, they're then able to pull themselves out of poverty, thereby moving towards a more sustainable and financially inclusive world. And so to speak more on this topic and its importance, we have 3 quick videos to introduce you to Green America, Kiva, and Accion.
Green America's mission is to help entrepreneurial women who live in poverty build businesses to enable financial mobility. We provide microloans, training, and support to underserved women entrepreneurs who are seeking to launch or expand small businesses. Entrepreneurship is hard, but Green America helps provide a support system.
When a group of women come together in a community, we've seen not just the woman herself or her family transform, we've seen entire communities transform.
We believe women can be engines of economic growth in the cities across the country. Through their ingenuity, they're building the future our country needs.
Sorry, I think the audio is still not working. Oh, okay. And then next we have Kiva.
Over 10 years ago, Kiva.org launched what became the world's first and largest crowdfunding platform for social good. Together, with nearly 2 million lenders, Kiva has crowdfunded over $1 billion in loans to over 2 million entrepreneurs across the globe. Today, we launched Kiva San Jose in the Peninsula. Small businesses are the lifeblood of our neighborhoods. They create quality jobs and enrich the cultural fabric of the entire region. But they often lack just a small amount of capital to start or expand their business. That's where Kiva San Jose in the Peninsula comes in. You can go to kiva.org and choose who you want to lend $25 or more to. A cleaning business in Santa Clara, a landscaping business in San Jose, or an artisan in Sunnyvale. As the person you choose repays, you can withdraw your money from the system or re-lend it to another entrepreneur on Kiva.
I'm Jannat, and I'm an industrial designer, and I love to design products that are eco-friendly and socially responsible. Recently, I designed a wooden purse. It's made of wood and cork, so it's completely sustainable and eco-friendly and recyclable. As designers, and especially artisans, we have so many creative ideas, and Kiva gives us the opportunity to jumpstart our ideas and bring them to the marketplace and bring them to a community that supports what we do and enjoys the work that we create.
And last but not least, we have Acción.
Acción now has been around for nearly 60 years, and we have been a leader and a pioneer for much of that time. I do think over the next 60 years, I think we can achieve our vision of creating a truly financially inclusive world where everyone has the basic financial tools to help improve their lives. Over its history, Acción has worked in 55 countries around the world. This allows us to see innovation on the ground where it's really solving problems, and then we can learn lessons and bring them to other places. I don't think there's another organization like Acción in the world.
Thank you. That was super insightful. Now I want to turn it over to our panelists. So can you please each introduce yourself, your role, and then what the mission of your firm is? So David, would you like to get us started?
Sure. Good morning, everyone. I'm David Goff. I'm the Senior Vice President and CFO at Grameen America. We're a U.S. 501c3 not-for-profit organization. Our mission is to serve low-income women in the United States with access to capital, savings mobilization, as well as credit score building and credit repairing. We serve 52,000 women exclusively in the United States through 23 branches in 15 cities. And we focus on micro loans. And we've, since inception, we started in Jackson Heights, Queens in 2008. And since then, we've disbursed $1.9 billion at an average loan size of $2,400 and to 135,000 women. So we're super excited to have done that. And they've rewarded us with a repayment rate of in excess of 99%. Thank you.
Thanks, David. Sarah, would you like to follow up with a quick introduction?
Absolutely. So Kiva is a crowd lending platform, which means that anybody, people like you and me, can go to the Kiva platform and give as little as $25 to someone in their neighborhood. The whole idea why Kiva was created was to bring financial inclusion and financial democracy, especially to people who usually don't have credit scores, get rejected by other financial institutions, are just starting their business, or are just not ready for like bigger loans. We very proudly call ourselves the stepping stool in the financial ladder, so people can hang on to the first rung of the financial ladder and then start their journey upwards. You can raise up to $15,000 on the Kiva platform with the help of 1.8 million active lenders on the Kiva platform, and also activating your own network in groups of family and friends. We are present in 89 countries around the world. The US program is relatively a newer program that started in 2014. We have already given out over $1 billion to small businesses around the world. Within US, we have supported over 7,000 small businesses since we've been working. And currently, we're working on a hubs program, which means we're trying to bring Kiva to every city in the United States by working with the city government, local foundation, and through this collaboration, we make sure that there's an ecosystem created for small businesses that are going to support them and move forward.
Sarah, now Christelle, we'd love to hear from you.
Hi, everyone. So Acción has two entities. There's the U.S. Acción Opportunity Fund, which really focuses on lending to small businesses. And I actually work for the International Acción, which is a global nonprofit working to help more people get included in the financial system. And we do that in three ways. We do that through investing in microfinances or fintechs. And we do it also through advising with those microfinance and fintechs and helping them expand their business and responsibly serve the people. And then lastly, we have our think tank, which is really focused on research and influencing policy so that the issues that are coming about in this fast changing sector now are being viewed by the government and making sure that regulation is in place for consumer protection. So yeah.
For those introductions, and kind of to start off our discussion now, I have a few questions about the industry, landscape, and trends, and then Maddie will follow up with your questions about your experiences in the field. And so kind of to start off, how are the risks different for a microfinance organization compared to a traditional bank, and how do you each kind of account for those risks in the lending process? Whoever can start off first.
I can go. I think the one big risk, and I can talk on behalf of Kiva in the micro lending process, is that small businesses are risky, right? They can fail. And we all agree to the fact that the reason they're so risky is because, especially in pandemic, running a business is not easy. And the whole idea is just to keep them afloat. So a lot of the times when small businesses are they're not able to pay back the amount that they have lended from their community. So everyone who comes into this circle of good to support their businesses in their neighborhood come with the understanding that there is a chance that this business might not work. So there's a chance that the $25 that I have given might not return. But if it does, then the money becomes really recyclable and you can give the same $25 to another small business and another, and that creates a really wonderful movement. So there's always this risk involved that, small businesses are risky. So everybody has to understand that and then, become a part of this circle.
I can second that. The biggest, the credit risk is, at Grameen America, we're lending to, by definition, to low-income women in the United States. And by definition, these women come from households living at or below federal poverty levels. And so clearly, the risk, we're taking a big bet on entrepreneurs. We in serving low-income women. The way that we mitigate the risk or manage that risk is because it's impossible with 52,000 borrowers, it's impossible to know every single borrower and exactly their ability to repay when you first meet them. So what we do is we organize the women into units, into groups of up to 35 women. They all come from community. We arrange the community, the centers, we call them centers, those agglomerations of up to 35 women. And we manage the centers weekly with a weekly meeting for an hour, whereby they bring proof of repayment for that week's loan installment. And we also offer financial literacy training and some surround sound around the other programmatic pillars that I mentioned around savings facilitation and then around the importance of credit scores and credit repair and credit building. So that's credit risk. I totally agree with Sarah, that's the biggest. And we mitigate it through our underwriting model, which has yielded an over 99% repayment. And then as a lender, we have all the risks that you would find with a regular bank, a lender out in the, with more of the names that you'd be familiar with. We have risks around technology, we have risks around diversification in terms of the geographic spread of our branches. In New York City, 60% of our portfolio is concentrated in 7 branches in New York City. And when the pandemic hit, we saw an impact in terms of borrower repayment in the early days of the pandemic. And because New York City is 60% of the portfolio, that had an outsized impact, at least for the second quarter of 2020. The good news is that it bounced back. We managed the business pivoted to a virtual setting. So we managed the pandemic risk, if you like. For a long time, we'd sat back and tried to construct scenarios whereby you could have one event that would impact the entire portfolio at the same time in the United States. And it was difficult until the pandemic came along. And then we learned very quickly to manage our way through the system. We pivoted those in-person weekly meetings to a virtual setting through Zoom, WhatsApp. The repayment rate held up. It recovered in New York City, which we were obviously very relieved about. And that is because our central hypothesis and chief business risk, the ladies that we serve, we've always believed that they're resilient, that we serve them and we serve their particular need because they don't normally have access to capital. And we always believed that they would prioritize repayment to us in the case of catastrophes, and we've seen that borne out. So yes, it's a risky business, but we feel that we know our clients and we manage accordingly.
Yeah, that sounds great. And I feel like there's so many risks that you touched upon. What about Christelle? Do you guys have faced similar experiences or?
Yeah, so Axion, we work through our financial service provider. So the risk really is lying with the microfinance and the fintech. Right now, they're going through a very difficult time because a lot of countries have implemented a sort of moratorium on loans. So that means that the borrowers can stop payment for now during COVID. And that's putting a lot of risk onto the portfolio of these microfinance and fintechs. And that's something we're very worried about because these are the people who are actually doing this work, just like Gurmeen and Kiva. So we've been corralling networks of investors, working through developmented banks and trying to get capital to keep these microfinance and fintechs afloat during this time. But similar risks that David and Sarah already explained, just at a global level.
All of you guys touched upon like a lot of risks, but it all sounds like you guys have different approach and like great approaches to mitigate those. And on top of all those risks, the pandemic, of course, added a huge other thing to consider for all of you, which is just crazy to hear how you guys have mitigated that too, which is really great. So kind of like touching more upon your different approaches in terms of like microfinance, do you guys see a way in the future or like how firms in the space can take a more collaborative approach with each other in order to create even more opportunity at a larger scale?
That's my favorite topic, so I can go. I do think that if there's one thing that COVID has brought, it's really made us understand the importance of human connection and the importance of collaboration. I absolutely believe that the advancement that we had to make in the next 10 years, we had to accelerate that in the 2020 only. So now, we all of a sudden grew up, I think. And Kiva takes a lot of pride in collaboration in terms of, yes, we are all doing great work, but if instead of doing that work in silos, if we come together and join forces, the scale can be huge. So we recently, I'll give you an example of how Kiva is collaborating in the space and creating ecosystems for small businesses, is we have created a new program called the Kiva Hubs program, which is super collaborative in terms of stakeholders. So what we do is we do a stakeholder analysis. Let's say we want to go into Arkansas. And the whole idea is, let's do a stakeholder analysis and see who's working with the same people that we want to work with: LMIs, refugees, immigrants, people of color, people who get rejected by the financial institutions. Then we go and partner with that organization, and we call this program a Kiva Hub, which means we go in, we train someone from their organization, and we call them the capital access managers. Those capital access managers are trained by the Kiva staff. We give them admin access, we train them how to do outreach, we train them how to create a lending community, they have data access, and then not just that, they support the small businesses, but the most beautiful part is creating a really active local lending community around their small businesses. And once we've done that, that city becomes a Kiva hub, we have constant connection with them, we have one-on-ones with them, and then they run with it. They use the Kiva platform and then create their own little movement in their city, which I think has been incredible. We started this program in 2019 and with 2 hubs, and we have 37 as we speak, and the number's growing. And COVID has really spread the word, and now we're getting a lot of requests from different cities because they would like Kiva to come to their city, especially for small businesses who got rejected by the PPP loans, who were really just trying to keep their doors open. Their own communities can become their best allies at this moment. And I think that's beautiful to watch. And it's just like a testament to the fact that the impact we can have together is so much bigger than what we can do alone.
Yes, for Grameen America, we in business now for since 2008. I think we're conscious of the fact that the first decade of our operations in the United States, we're really proving out the concept of microfinance in the greatest and richest country on the globe, and we were very much focused on doing it our way. In that first decade, we had tremendous resonance with the Hispanic population that we serve. And we also did it in a way that brought the organization to break even. So we run our organization as it's a social business. So we have our social mission, but we run it like a business. And we have been at break even. Well, we were at break even in the first quarter of last year. Then the pandemic came along. We forgave interest on our loans, so we weren't at break even. But as of January, we're back at break even. So we're very proud of that. But I think one of the downsides of that is we were sort of playing in our corner. And when we've taken a very close look at how to serve other communities, for example, the African American community, we realized that our approach needed to change. And we realized that we need to do it in a way that we engage with partners, in the collaborative way that Sarah has outlined, because serving, for example, the African American market, which we think it's 1.4 million women in the United States who potentially could be a Grameen borrower, we found that there's a deficit in terms of our ability to go into a community and gain trust very quickly. So what we're doing is very actively working with community organizations to help develop trust so that we can develop trust with the potential market and bring members into the program who will trust Grameen the way our core Hispanic market trusts us. So we're very excited about that. Stay tuned. There's a very major announcement coming within the next few weeks. The other way that we're thinking about collaborating, and we will need to collaborate, is in terms of the women in our program who've been with us for a very long time have now cycled their way to bigger loans. So the way a Grameen loan works is she comes in and her first loan is up to $2,000, and all of our loans amortize over 6 months, so 26 weeks, weekly amortization. And when she pays off at the end of those 26 weeks, if her center agrees, the other lady is up to 35, remember, in the center unit that I was speaking about. If the center agrees, then she will stay in the program and qualify for an upsize. So your loan size in the Grameen program is a function of how long you've been with us. And we now have some women who've been with us since 2008. And we're giving out our largest loan we've ever given out is, and it's to a handful of women, $16,000. So those are ladies who've been with us for a very long time. Now, as we bump up and get to bigger loan sizes, and we think in about the $25,000 loan size, we are seriously considering how do we hand off the relationship, because we're very good at making those very small loans and recovering the loans and bringing the women through the program and bringing our program, the benefits of our program to our borrower base, which have been signed off on by an independent randomized control trial, which maybe we'll speak about. But our sweet spot are those very small loans. And once you get to $25,000, say, it's a choice for us between 10 new women coming into the program through our branch network or making one loan to someone who's been with us for a long time. So we really see opportunities for collaboration, aligned organizations as we get to that handoff point.
Add to David, this is incredible what Grameen does. I've been a big fan, but this whole idea of the financial ladder, like I'm a very visual person, but if you imagine the financial ladder, the first rung is always the highest and the most difficult to reach, right? You have no money, no one wants to give you any money, but as you go up, the rungs start to shrink. So I think this is, again, a very good sort of collaboration that, once they've done with Kiva, then go to, or Grameen, then they go to another CDFI, then they go to Axion, and then they go to SBA. And as they move up, their loan increases and those rungs shrink. And I think that's the only way we can actually help them get out of that vicious cycle of poverty.
Exactly. And we're all kind of in the ecosystem, we all have a different role. So Grameen has its niche at that sort of entry level of women living at or below federal poverty level. So in New York City, that means a household income of $24,000 or less. And then as the women progress through the program, their needs change. And so we can't be all things to all people, but that's where the ecosystem becomes really valuable.
Absolutely. And even with the partnership between fintechs and microfinance, there's just some things that these traditional microfinances cannot do or cannot pivot quickly enough to the digital way. So thinking about thin file clients, these are people where they don't have any credit history. And so it's so difficult for them to get credit. But if a microfinance institution works with a fintech that can collect data on how they pay their phone bill or how they interact on their phone, then they can potentially give some information to be visible to these microfinance and be able to get some sort of credit.
Absolutely. And just one last point, there's like over 60% of people who come to Kiva have been rejected by other financial institutions. And there's something to say about the fact that, even if we collaborate with regular banks, they don't have to say no to anybody. When they don't qualify for the bank loan, they always have another exit route for them that, go to Grameen or go to Axion or go to Kiva, start your journey there, and then come back to us, so that they just don't feel rejected and dejected and, they don't know where to go. And I think there's some value in having that collaboration with banks as well, right? Other bigger institutions and foundations and everybody else.
Absolutely. When it comes to the banks, and I love them, but a big part of our program, a pillar of our program, is savings facilitation. So we're a 501c3. We can't capture deposits, and so we do work with banking partners to help to facilitate the savings. And it's the banks. The part of the challenge, I think, of where we're engaging with the banks, and this is collaboration, it's a constant task that we need to undertake, is you might hear at the sort of very senior level, there might be a real meeting of the minds in terms of, oh, this is great, we should really be helping with the savings facilitation. Once you translate that at the branch level for the particular branches, it becomes very difficult because their alignment, the way they're measured might differ. So when we start suddenly channeling, we found with some relationships where we started channeling a lot of low-income folk who were saving maybe $4 or $5 a week. That was great at that senior level for the banks, but at the ground level, the branch managers of the local branch, say in Upper Manhattan, he or she isn't being measured by the volume of people coming in. They're being measured by the volume of savings that they can help to mobilize, and then that features features in terms of their branch economics. And so it's this constant collaboration is extremely important, but sometimes it's a labor of love. It takes a long time, and it works eventually. Our members have aggregated savings on average of over $600 per member, which it's a very important indicator of future success for the household to be able to aggregate that level of savings. So collaboration sounds great. It's a lot of work, but it is worth it.
Yeah, no, it's just really exciting to hear though about all the partnerships and and all the growth that all of you have experienced, and hopefully as you expand and grow, we can kind of move up like that ladder that Sarah was speaking about into a more financially inclusive world in the future.
And I know that you've each kind of touched on this a little bit in discussing how things have changed because of COVID. During my time at Grameen, I saw things change really rapidly and moving to more of a digital format and making the center meetings virtual. So I wanted to pose the question to each of you of how you've seen the microfinance landscape change over the last 5 to 10 years, and maybe where you see it going from here, given all of the changes that you've seen just in the past year. So whoever wants to take it away, go for it.
I can go. So digital transformation was of these institutions had started before COVID, but of course it has made it imperative that there is a way that people can interact with their with the institution virtually. And so we're seeing a lot of new fintechs pop up, a lot of questions about data and how data is being used for the people who are using digital tools. And so I think it's going to continue further into that partnership between microfinance and fintechs. It's going to be a consolidation. I think that unfortunately some microfinance institutions will not survive COVID. And so we'll see more of a consolidation in certain markets. And that's gonna bring new things, and borders are now not an issue. So people are going to expand their business in places that never before. And so hopefully that means that we'll get more rural clients. We'll get people who can use digital means to show their credit worthiness and be able to get loans. So I think that's just going to continue to move very quickly in that direction.
I think I would like to speak more on, again, back to human connection level. And, I think there's one thing that has been really fostered during COVID is trust in each other. And again, speaking from the crowd lending perspective, I think there are enough people in this world that even if everybody decides to help someone in their neighborhood, probably people will not want to go to the banks in the long run. We very proudly call ourselves the Bank of People, which was a term coined by our wonderful mayor in Oakland. And I think that's a beautiful term, right? There are enough people to support their own people. And I think if we out and start helping our own communities, that could be the future of microfinance, right? There are enough hands out there, there are enough borrowers, there are enough lenders, and that can create something really magnificent in terms of people helping people.
Absolutely. The trust component cannot be emphasized enough in our industry. And I touched on that around when I spoke about the collaborations that we're looking at entering into to gain the trust of the African American community, so that we can begin to serve them in terms of the, at least in terms of the numbers and the volume that we would like to. One of the important things that we've learned institutionally over the last year is, one, we underestimated our members slightly in the run-up to the pandemic, because whenever we were thinking about virtualization and digitalization, we were hesitant to move too quickly because of a perceived, we didn't want to leave members behind, because we wanted to bring everyone along at the same comfort level with some of the technology. And we learned very quickly in the pandemic that our members were actually ahead of where our expectations were. Our attendance in the virtual setting for weekly Zoom meetings, and you go on, and in the beginning it's a bit of a challenge because everybody needs to learn where the mute button is, but over 90% of people are attending. That connection, when you go into a virtual center meeting and the women who they live in the same neighborhood and they might not have seen each other for a long time, they're keeping those connections, they're keeping those social bonds, and they're really valuing the kind of the space, that virtual space that Grameen has been able to bring them into during the pandemic. And so, great lesson for us. We're also learning that we can break geographic barriers that we felt were there, so we can go into communities where there might be less of a population density, and we're very excited about that and being able to do that. And also recruiting in the virtual environment. We've now recruited 3,000 new borrowers into the Grameen program since November. These are first-time borrowers exclusively recruited in the virtual setting, and their loans are Grameen standard loans. So delinquencies are 0.3% of 1 day or more on those loans. So absolutely the trust. I think going forward, it's going to be to learn to balance the two, because I think we will drift back into a physical environment. I think people really value that. But I think that there will be some lingering lessons that we've learned, especially around our program delivery in terms of the virtualization.
That was super insightful. It's really interesting to hear about how operations differ at each of these three companies, but at the end of the day, it seems like it really does come back to trust amongst your borrowers and then amongst each of your companies. So really important to on that. I'm also wondering from each of the three of you what you may have found the most rewarding in this line of work, but also any challenges that you may have encountered over your careers. So whoever wants to take this one.
Sure. So I've done two field studies that field trips that stayed with me. One was in Mexico with a company that we invested in called Tienda Pago, and basically Tienda Pago gives short-term loans for small bodegas in Mexico. So it's 2 weeks working capital loans. And I visited multiple stores, and it was incredible to see how resourceful people can be with just a little bit of capital and able to put in their inventory for the sort of routines that they know in their neighborhood. And with that capital, they're able to say, okay, Saturday, there's a soccer game across the street. I can have use this working capital to get my inventory so that Saturday I'm ready to sell. And this is going to help me tremendously grow my business, pay for things for my family. And knowing that we had a part in that and that they were so appreciative of it, and also seeing them get excited about their business, knowing that there's opportunity for them. There's a way to do things now that they didn't have before. I think that really stuck with me. And then I know it's a bit far removed, but we had a governance conference where African CEOs and board members would get into a room together and talk about the issues they're having and challenges they're having with their microfinance and trying to serve their clients better. And it was so encouraging to see together there'd be 50 people who represent over 1 million clients coming together and saying, oh, I'm learning from you. I'm going to bring this back and make this influence in my community. And I know it seems far removed, but it's something that didn't exist before, that kind of collaboration with leaders and being able to make changes into their own community was really insightful for me to see that, and inspiring. And I think this really comes home to me because I'm Brazilian, and in Brazil, going to the bank is long lines, it's bureaucracy, it's difficult, like you need to talk to this person, you need to talk to that person. And seeing that things are becoming more digital and there's possibility for people in Brazil, people everywhere can do things on their phone, just like most of us here. Being able to do that for people it's going to have a tremendous impact on their lives because of the time spent going to the bank, the opportunity of getting those loans and putting that to use for their families. And so that really is rewarding for me in working in this field.
I'm going to share one of my favorite stories, still warms my heart. Here in San Jose, we had a person, African-American person, who was incarcerated for over 22 years. He comes out, and of course, it's really difficult for people who are coming out from the system to get any sort of loans. He raises $8,000 in Kiva's platform and starts a really small cleaning business. So well that now he has his own employees. And we also really encourage repeat borrowers that if you have raised money on the Kiva platform, you have built your trust. There's a community that has already supported you. So the next time once you've paid that first loan and you come back, we already know who you are. So there's trust that's already been developed. So you can raise as many times as you like. So he came back, raised again. And it's just so amazing to see his journey of like coming from the system, not knowing what to do, and then starting his own business. And I do think that entrepreneurship is actually, a way out of for a lot of people who really don't know what to do, because a lot of Hispanic borrowers actually are entrepreneurs, right? Stay hungry, stay foolish it works. And another quick story, there's so many beautiful human stories out there that just speaks to the importance of microfinance. This woman comes, actually she was the first woman who I helped fund in the Bay Area. She comes to us, amazing chef, and she makes cannoli, and her cannoli is called Holy Cannoli, which is absolutely incredible. So if you guys are ever here, please try Holy Cannoli. And she comes and she wants to raise money to rent kitchen time, and she did that. And from there on, she went on to getting a food truck. From food truck, she went on to getting a space in a little restaurant, and now she owns her own restaurant. And that journey of like just getting space to, being a restaurant owner is just incredible, and it warms your heart, and it shows you, the power and tenacity of these entrepreneurs. That's what wakes me up every day.
Absolutely. One of the things, and I miss many things about the physical environment, is the ability to go into whichever of our branches, 23 now, 27 by the end of this year, and go to a center meeting, and the constant joy that you get from doing that, from meeting the women who are benefiting from the program, is quite incredible. We knew long before the randomized control trial came along and validated the effectiveness of our program, we knew that it was working in terms of the improvement in self-esteem, in terms of the confidence building of the women. And that journey that Sarah mentioned, we see it repeated many, many times. There's one, and our staff are amazing. Our branch staff are absolutely incredible. One of our branch staff in our Jackson Heights branch, the first branch, befriended a woman who was living on the subway on the 7. And she was homeless. She'd left the domestic violence situation with her young child and was living on the train. And our staff, they come from community, and they're so motivated to help people, befriended her, got her into the program, got her into one of our starter loans of up to $2,000. She then, rented a chair in a nail salon. That's the business model, is you rent a chair that you pay the rent to someone else. And you fast forward, and it's about 7 years now. Now she actually owns that salon, and she rents chairs to other women. So it's that kind of progress that where you see an individual's progress and an individual's journey, but also the strengthening of the community on the way. And it really, no matter how bad your day is, and some days are bad, you can always get a pick-me-up from just thinking and just remembering some of the interactions that you've had, both the borrowers and the staff in the branches.
So much for sharing those personal stories. My last question was going to be, what advice would you give to students who are looking to pursue a career in the microfinance industry? But it also looks like we have a question in the chat, which is, are there any specific skills or experiences you look for in new hires, specifically for recent grads? So I think it would be great then if we could transition to the Q&A portion, beginning with any advice that you might have for people who are looking to enter this space.
I think we've touched upon this, human interaction is really key. Really getting to know what the people you're trying to serve they're dealing with, so that you can create that empathy and that understanding of how the system is working for them now, so that when you go back to the organization, depending on whatever capacity it is, between either actually being a loan officer or working a few steps removed, you always have that in your mind when you're working long hours, thinking of new ways to serve these people better and make improvements. And certain skills for this industry, it's so vast, it's so big. You can come from the research angle, you can be an investor in fintechs, or you could be a loan officer, you could be designing new products that serve these people and experiences because of everything going digital now, and thinking about operations for these. So there's so many ways, but I think if you can get that experience at a microfinance institution first, that could open so many doors for you.
Absolutely. And to add to Christelle's point, there are so many ways to get your foot in the door. There are internships, there are fellowships, yeah, and I always think that having an internship right after you graduate is always a good idea. It gives you a flavor of what the real job might look like. So yeah, apply for internships, apply for these fellowships, come in, work with these people. It's absolutely gratifying when you know that the work you do every day is actually changing lives. And once you get the taste of that, I think there's no going back from that.
I started life as an investment banker with Credit Suisse. So for many years, I was doing global M&A and project financing out of Credit Suisse in New York. That experience that I had in terms of the skills that I acquired in terms of the financial services industry was absolutely invaluable. I love the space, I love the industry, but I felt that I was missing something, and I think that something was the human contact that we've all spoken about, and this feeling that you're actually helping people. I would say to people who are coming in, especially those folk who may be of a financial mindset, is absolutely take a look at internships. We have a great plug. We have a great relationship with the co-op program, Northeastern. We're now up to 5 co-op students that have passed through us for 6 months at a time. But at the same time, I would say that our industry is really crying out for skilled, talented professionals, particularly with the financial services skills and in the financial industry, to come in to improve decision making, to improve the analytics. So if you come in and you get a flavor for a microfinance institution, it might be a good idea to go through the analyst program at an investment bank, go through the associate program, become a vice president, and then your value add when you come into the impact space will be absolutely phenomenal. And there's plenty of room for individuals with that background, that skill set, and that is married to this this desire to want to help people.
Yeah, no, that's really great advice from all of you. Thank you so much. I'm also going to plug the co-op program in America. So, and I think we have time for either one or another question from the audience. So I know that the pandemic has obviously affected everyone, but more so towards the microfinance. Have you noticed any changes in the sentiment or the popularity of microfinance since the pandemic hit?
I think we already touched upon the fact that, I think pandemic has really made people understand that we can help each other. A lot of small businesses who probably would have shut their doors are staying afloat because of their own community. And I think that's because of the pandemic. Yes, we're all on Zoom calls, but I feel we're more connected than ever because all of a sudden we realized how important it is to, support each other and help each other. And what's the point otherwise? And I think that Corona has played a really big part in that.
A few questions, so maybe we can just do one answer for each possibly. Another question is, what can be done to combat microfinance industry organizations that are focused on exploitation instead of breaking the cycle of poverty? And does that have to occur at the government level, or can organizations like yours help?
Well, Grameen, I think by definition, breaks or is definitely not I'm not sure what the questioner means by an exploitative organization. We, through our program, very transparent organization, we provide the services that I mentioned. For every $1,000 that we lend, we earn $43 of interest. So we provide our service, which has reduced material hardship of our members in a proven way, and we continue to do that. I can't really speak about other institutions. I'm not sure what entirely is meant by that. We're regulated in the states of New York and California by the respective departments of finance. And so from a consumer protection perspective, we're fully compliant with both California and New York. And we roll that out across our entire branch network to states, for example, Texas, where the regulation is different. We have kind of a lowest common denominator approach to regulation and to protecting our borrowers.
And just to add to that, just as David said, transparency is so key here. And that's what I was mentioning earlier about governance, good governance for the microfinance institution. So a good board, good CEO, all working together. And that was part of the program that Action had a couple of years ago in Africa, is to create a place where people could talk about their challenges and get to know their clients. There was also a client visiting aspect so that they can really, the CEO hardly interacts with the people that they're working with. So this was a way to have them interact and think about, okay, I need to change things. I need to learn from my peers and how they're able to be sustainable without exploiting their clients. But I think there's a mix of the governance, the government, and the industry at large to really be transparent about how they are giving these loans and the costs.
Super quick question. How do you look at the need or demand of microfinance in developed versus developing countries?
I can speak to that very quickly. Since Kiva is all over the world and also in the US, for a very long time, Kiva only had global presence and we didn't really operate in the US. But I think the need is everywhere. It's really interesting how many people can use support of, like microfinance in places like Grameen, Kiva, and Action within the United States. Yes, there's a huge need out there, but I think small businesses are everywhere in developing countries, in developed countries. Yes, the dollar amount is different. The $10 amount or $20 or $50 amount goes a long way in a developing country compared to the US, but there's no denying the fact that the demand is equal everywhere.
Absolutely. I mean, we operate exclusively in the United States. And I referenced it earlier on. Our first decade was spent really proving the concept and proving the need. People would say to us, what can a loan of $2,000 do for someone? And there was a lot of skepticism around that. And, fast forward 12 years, and I can show you 135,000 women who've been in the program and benefited from the program, who have found that very useful for them, particularly when they had no other surround sound, they had no other context of support to help them, and no one else would believe in them. So absolutely, there's the need in the richest, greatest country on earth. There's need, I can tell you, and I have experience in the developing world as well, and the people are the same. Low-income people everywhere who really need the service. And what they all have in common is they're not stupid, they're just poor. And that's where organizations like us can help them and help them to use their intelligence and their desire to get by, to give them that hand up.
Yeah, so unfortunately, I think that's all that we have for this session. But thank you so much to Sarah, David, and Christelle for sharing all your insight, and the audience for joining this session. We hope everyone listening was able to learn a lot about the microfinance industry. I know I have. And so for the audience, we have our career conversation with NU Impact alumni coming up next. So see you there and hopefully our later events too. Thanks everyone, and thank you so much.
Thanks.
Thank you.